We had a $35,000 price 5 months ago, and we're now $70,000. And so it's been a monster rally. That rally was mostly fueled by adoption, right? With the ETF, it made it very easy for people in the U.S. institutions and the wealth channel, most importantly, to access Bitcoin for the first time. I think this is just starting. This is a process that's going to go for years.
This is the most successful ETF launch of all time. We've never seen anything like this. We're not talking institution. None of the institutions are in yet, really.
ProShares, VanEck, and Bitwise all launching their products. This coming as Grayscale files for approval to convert its Ethereum trust into a spot Ethereum exchange-traded fund.
But another potential ETF filing coming into the picture.
We were really pleased, of course, to be able to launch BITI this week, BITI, and that, of course, follows on our extremely successful ETF launch in history.
In this video interview, not 2, but 3 investing giants explain why the months ahead will be phenomenal for Bitcoin. Mike Novogratz, CEO of Galaxy, Dan Tapiero, managing partner and founder of 10T Holdings, and Raoul Pal, founder and CEO of Real Vision, all share their take on why the impact of the ETFs is still criminally underrated. Novogratz kicks off by discussing Bitcoin's price action, which led to setting an all-time high post-ETF launch. He explains that this, in his words, monster rally was driven by global adoption of the ETF. Dan also shares a similar opinion, and he and Raoul discuss how the Bitcoin Spot ETFs are by far the most successful ETF launch ever. The Bitcoin Spot ETFs have traded for over 2 months now and have a total net inflow of about $12 billion, even with the GBTC outflows. Bloomberg analysts have said that if this was the performance at the end of the year, they would call the ETF launch a success. But Mike, Dan, and Raoul insist that this is only the beginning, and that it might take a while to fully see the impact in price action. The consensus between the 3 men is that something big is coming, and it's coming soon. Let's dive in to hear their insight.
Bitcoin has broadly doubled since November, so let's hold this in context, right? We had a $35,000 price 5 months ago, and we're now $70,000. And so it's been a monster rally. That rally was mostly fueled by adoption. With the ETF, it made it very easy for people in the U.S. institutions and the wealth channel, most importantly, to access Bitcoin for the first time. At the same time this is happening in the U.S., we're launching ETFs with our ETPs with DWS in Europe. We've got partnership with Itaú in Brazil. And you're seeing people around the world participating in the simpler form of Bitcoin, an easier access form. And so I think this is just starting. Prices are going to consolidate for a while between 75 and maybe 62 or even 58. You could see a consolidation. Each 100 days, our government's adding $1 trillion of debt. That story is so powerful. It makes it easy for salespeople, for registered investment advisors to tell their clients, put a couple percent of your net worth in Bitcoin. And you're seeing that happen. This is a process that's going to go for years, not for months.
As Mike explained, prices have more than doubled since last November, and thanks to his insight, we understand that this isn't even the beginning. Institutions are yet to start allocating to Bitcoin, and many investors are still on the fence. But as Raoul and Dan will soon discuss, as prices rise, there'll be a certain cannibalistic reflexivity in prices, and Bitcoin will continue to skyrocket. Next, Mike discusses why, even against macro analysis, Bitcoin continues to increase in value. Sit back as we bring you more clips from the Novogratz interview.
Bitcoin trading, there's a lot of short-term liquidity, and the market doesn't think that inflation is going to tick higher over a medium and long-term basis from this point.
Listen, you could have bought a house in America in 2012 for $190,000, and today that number's about $400,000. When you print as many dollars as we're printing, forget what the headline inflation number looks at, because you have asset inflation that doesn't go into CPI. At times you have food inflation, and so you have lots of different inflations. The purchasing power of the underlying currency goes down. Look how much silver a British pound gets you today. Long-term history of governments is that they debase their currencies, and we're in that process. GDP as a federal budget, that number should be 20. So we're 5% of GDP off where a real good, tight government would be spending. And I just don't see that changing, right? Populism is taking over the world. It's a very scary world in that respect. I'm really skeptical that we're going to have a symbols or something to balance the budget or someone to cut spending. And until that happens, it's easy to sell Bitcoin.
The Fed has refused to cut interest rates, and it seems like liquidity will be entering the market later than most analysts predicted. But Mike has explained why Bitcoin is acting indifferent to this and climbing the charts regardless. He's explained that national debt is soaring by an estimated $1 trillion every 100 days. This mounting debt and the inevitable debasement of currency make it very easy to market Bitcoin due to its unique properties as uninflatable. debatable. Next, Dan and Raoul give their takes on the ETFs and expected price action.
This is the most successful ETF launch of all time. We've never seen anything like this.
In one day, we onboarded essentially $100 trillion. You think about all of the people globally who have stock accounts, how much value is held in all of those accounts globally. Not just Americans who love to own assets via equity and ETF form, but just think about people in Asia, people in Europe who have equity accounts. All of those traders on the interactive broker platform now can just push a button and they own Bitcoin. I didn't have any specific idea about it. I just thought it makes it really easy for people to own. And I have a lot of investors in my fund who maybe are a little older, and I've had a few of them tell me over the last 2 years or so, I would say, oh, did you get your Bitcoin? Now's a good time, 20,000, 25,000, 30,000. Buy a little Ethereum, 1,800, 2,000. They're like, no, we're just gonna wait for the ETF. So I always have a lot of actual first-hand data. So I was pretty confident. And the guys who are saying this to me are very sophisticated old world investors.
These RIA networks generally talk to their clients about, you should think about an X% allocation. They put an X% allocation, or they mandate it and say, hey, we're going to do this for you guys. And then what happens is start with 1%. And then before you know it, they get up to 5%. And then like, we're going to 10% because they start to understand the power of this thing. So it becomes very reflexive in price action. I've seen family offices. I've got one of the investors in my fund is a big Australian family office. Their allocation was 1%. I think they probably got up to 20% in crypto allocations in the end, because once the principals started to understand it, it just keeps building on itself and price action just builds on it. So we've, as Dan said, we're really, really early still.
I would say that also many people will do a dollar cost average. So this is, someone will say, okay, I'm going to 3%, and they do 0.5% every quarter for the next few quarters. So I think there are a lot of people who purchase things like that. Very few people just come in and say, okay, put 5 million in, it's an all-time high, I don't care. So I think that you have to expect that there's a tail to many of these purchases.
The 401k bid in America is another big thing. One of the reasons passive funds have outperformed active portfolios, like the NASDAQ and the S&P, keeps outperforming is because millennials every 2 weeks add to their 401k of this stuff. They can now add Bitcoin into their 401ks. So that becomes a every 2 week bid that goes in perpetuity forever. Now, it doesn't mean it can't go up and down with the business cycle, but it's a very big structural change that people don't really understand.
Raoul and Dan have just explained that there's an ongoing structural change because of the ETFs. Most people believe the ETFs provide access for US entities, but Dan has corroborated Mike by explaining that these ETFs allow anyone anywhere to invest in Bitcoin the same way they can for any US stock. This means that the entire world, all individuals and institutions, can now access Bitcoin with the same ease as buying the SPY. It's not too difficult to see why this is extremely bullish, but building off where Mike stops, Dan is about to break down why Bitcoin's recent movements signal that the market is sitting on a keg of gunpowder.
I've been calling since Q1, since Q4 22. I thought the low was in. I was pretty loud about it on Twitter and at conferences. And first half of 23, super bullish. And I think that this is one of many very bullish factors. So we haven't even had a supportive macro backdrop yet. So the Fed hasn't even cut yet. If the Fed funds rate is at 5%, do you think Bitcoin will be at 70,000? I would have thought probably needs to wait a little bit. So there's no waiting because the market knows that inflation is slowing and the Fed is just lagging that cycle.
Bitcoin is currently trading around $72,000, up from a few hours ago, as the halving approaches and the Fed eventually cuts interest rates and the market experiences more cowbell, as Raoul fondly refers to it. One can only imagine where Bitcoin will be in a few months. What do you think about the ETFs and the overall bullishness of Raoul, Dan and Mike? To see the latest in crypto news, watch this video here.